All right, so today we're diving into something that honestly everyone should know about, even if you don't think you're a high roller investor type.
Absolutely. Investment fraud can really happen to anyone. And I think a lot of people think, oh, that'll never happen to me. But it's more common than you might think. And the thing is, you're right. You don't have to be some Wall Street hotshot to be a target.
Exactly. So, no three-piece suits are required for this discussion.
Yeah, oh, not at all.
We're really digging into the nitty-gritty of how to spot shady investments.
So,
And, we've got a whole list of these scams to unpack. Thanks to you, by the way, you really came prepared.
well, I've always believed that knowledge is power, right? Especially
Mhm.
when it comes to something as important as your finances.
Absolutely. And the more you know, the better you can protect yourself, which is kind of the whole point of this deep dive. So, to kick things off, let's talk about those too good to be true situations. Like, picture this paycheck day. You get an email promising you, say, a 20% return on your investment, and they're like, guaranteed, no risk. What's your first thought?
Well, my first thought would be scam.
Yeah, exactly.
It sets off all kinds of alarm bells in my head because realistically, any investment that promises those kinds of sky high returns with absolutely no risk is probably too good to be true. It's like the oldest trick in the book.
Yeah, it's like dangling a giant, flashing neon sign that says scam.
Exactly.
But you know what? Sometimes those signs can be a little more subtle.
Oh, absolutely. And that's what makes these scams so dangerous.
So let's break down a few of the most common types of investment fraud, starting with what you were just talking about, those too good to be true schemes. This is where we get into things like high yield investment programs and Ponzi schemes.
Right, and these can be especially tricky because they often start out looking completely legitimate. Like with HYIPs, for example, they might dangle these incredible returns, claiming to have some secret formula for success or some inside track on a hot new market.
Yeah, and it sounds so convincing. They use all the right buzzwords. They might even have a fancy website and testimonials.
Exactly, and that's all part of the illusion. They know how to make it look convincing. But the reality is, these programs rarely generate any actual profits. They're basically just robbing Peter to pay Paul, using money from new investors to pay off older investors, just long enough to keep the scheme going.
And that's essentially the same principle behind a Ponzi scheme.
It is. It's all about creating that illusion of a successful investment, when in reality, it's just a matter of time before the whole thing collapses.
So it's like a giant house of cards.
Exactly. Eventually, the new money dries up and the whole thing comes crashing down, leaving everyone who bought in except for the scammer at the top with nothing.
And these scams can be so devastating, not just financially, but emotionally too.
Yeah.
It's like you think you're doing the right thing, investing your hard-earned money, and then suddenly it's all gone.
Absolutely. And the worst part is it can be really hard to spot these scams before it's too late because the people behind them are often very charismatic and convincing. They know how to gain your trust, which is especially true when it comes to something called affinity fraud.
Right, which is basically when a scammer uses a personal connection or a shared affiliation
Yeah.
to trick people into giving them money.
Exactly.
Yeah.
So this could be anything from someone in your church group, a fellow alumni association member, even a family friend who uses that shared connection to build trust and then takes advantage of it.
Which can be especially difficult because it feels like a betrayal on a personal level.
Absolutely. And that's why affinity fraud can be so effective, because it preys on those pre-existing relationships and the trust that comes with them.
So it's like the scammer's not some stranger in an email anymore. It's someone you know, someone you might even like and respect, which makes it so much harder to suspect them of wrongdoing.
Exactly.
Okay, so we've talked about those scams that promise the moon and those that prey on personal connections. But what about those that are like more out in the open? I'm thinking specifically of what's called a pump and dump scheme.
Right. So this is where things get really interesting, especially in the age of social media and online trading. Pump and dump schemes basically involve artificially inflating the price of a stock, usually a smaller, lesser known company, through false or misleading information.
Yeah, so it's like creating hype where there shouldn't be any.
Exactly. So you'll see a sudden surge of positive reviews, social media posts, online forum discussions, all singing the praises of this amazing company that's about to take off. And of course, the goal is to entice unsuspecting investors to buy the stock, driving up the price.
And then, once the price is high enough, the scammers who got in early at the low price sell off all their shares, leaving everyone else holding the bag when the price inevitably crashes back down to reality.
Exactly. It's like musical chairs, and the last one standing is left holding a worthless stock.
So how can investors protect themselves from falling victim to these pump and dump schemes? What are some red flags to watch out for?
Well, first and foremost, be wary of any stock that seems to be skyrocketing in price for no apparent reason.
Especially if it's a company you've never heard of before, or their product or service sounds too good to be true.
Exactly. Do your research, look for credible news sources, check out their financials, and if something feels off, trust your gut.
And that's really good advice for avoiding any kind of investment scam, isn't it? Trust your gut. If something feels too good to be true, it probably is.
Absolutely. Never be afraid to ask questions, to seek out a second opinion, or to walk away if something doesn't feel right.
So we've covered a lot of ground here today, from those promises of unbelievable returns to the dangers of trusting the wrong people.
We have, and honestly, this is really just scratching the surface of a much larger issue. But hopefully, it's giving you a good starting point for understanding some of the common tactics that these scammers use.
And hopefully, it'll make you think twice before jumping into any investment opportunity, no matter how tempting it might seem.
I think that's a great takeaway. Remember, investing should be about long-term growth and security, not get-rich-quick schemes.
Exactly. And if something feels off, don't be afraid to walk away.
You're always better off being safe than sorry. So before you hand over your hard-earned money, do your research, ask questions, and make sure you're comfortable with the risks involved.
All great advice. So the next time you see one of those can't miss opportunities pop up in your inbox or social media feed,
Hit delete or keep scrolling.
and keep your money safe.
Exactly.
Well, this has been a fascinating, if not slightly terrifying, look into the world of investment fraud.
It really has. But remember, the more you know about the tactics these scammers use, the better equipped you'll be to spot them and avoid becoming a victim.
Absolutely. So keep asking questions, stay informed, and most importantly, trust your gut.
And on that note, here's something to ponder. How can we all become more proactive in educating others, especially younger generations, about the dangers of investment fraud? Because this is a conversation that needs to happen more often.
Absolutely. Because knowledge is power, and the more we know, the safer we'll all be.
Couldn't have said it better myself.
Until next time, stay vigilant out there.
Stay vigilant.